Are you wondering what war means for your investments? Here's perspective you actually need. Welcome back to Money Not Math. I'm Drew Erickson. Today we're talking about a topic that comes up every time global tensions rise, investments during a time of war. And as always, this is an educational conversation. I am not making recommendations or predictions. My goal is to give you clarity, context, and perspective. When headlines turn toward conflict or global instability, it's completely normal to feel uneasy about your money and your future. And that's exactly why I created the video series and podcast Money Not Math, because money isn't just numbers on a page. It's your life, your goals, and the future you've worked hard to build. The math matters, but only because it supports a plan you can actually understand. At Five Stone Financial Group, we work with families who want clarity and confidence as they move toward retirement. So when the world feels unpredictable, we hear a lot of questions like, should I change my investments because of what's happening right now? Today isn't about making predictions or telling you what to do. It's about giving you the perspective that helps you stay confident. If you want guidance that fits your specific situation, feel free to reach out and we can have a conversation. Let's talk about what history actually shows us. Not to make predictions, but to give you perspective. When researchers look back at major wars and conflicts over the last several decades, they often study how the US stock market, usually the S&P 500, behaved in the 12 months after those events began. Here's what they tend to find in very simple terms. In many of the last major conflicts, the market was actually positive over the following year. In some cases, returns were negative, but usually because of things like recessions, high inflation, or bubbles bursting, not just the war itself. For example, going back through events like conflicts in the Middle East, the invasion of Ukraine, the Gulf War in 1990, and even earlier wars, there are plenty of periods where markets dipped at the start, then recovered as investors refocused on earnings and the overall economy. There are also times, like the 1970s oil shock or the early 2000s dot-com crash, where returns were poor, but mostly because the broader economy was struggling. One long-term study by Hartford Funds looking at conflicts since World War II found that after 73% of conflicts, the US S&P 500 was actually higher 1 year after the conflict began. And after 95% of conflicts, it was up after 5 years. Now, here's the important part. That does not mean war is good for markets. And it absolutely does not mean the market will react the same way in the future. This is simply history, not a forecast, not a guarantee, and not a recommendation. Historical market performance is not an indicator of what will happen going forward. The big takeaway is this. Historically, wars have felt catastrophic in the moment, but over time, markets have tended to be driven more by things like economic growth, interest rates, inflation, and company earnings than by any single geopolitical event. Even during global uncertainty, the most important questions are not about the world, they are about you. What is the purpose of each dollar you've invested? What's your time horizon? Is it 5 years, 15 years, or 30 years? What level of risk helps you feel confident about your future? Do you have a plan that provides clarity even during volatility? Do you have a strategy to account for market volatility and inflation? A retirement plan should be built around your life, not around headlines. When global events happen, I typically see three types of reactions. One, panic selling, driven by fear, not strategy. Number two, trying to time the market, historically extremely difficult to get right. And number three, staying grounded in a long-term plan. This often brings the most peace. So ask yourself, which of those types of people would you want to be? Number one, panic selling. Number two, trying to time the market and hope it right. Or number three, staying grounded in a long-term plan that's built for you and your life. These aren't recommendations. They're observations from conversations I've had with families over the years. It's completely normal to feel uncertain when the world feels unstable, but perspective helps us breathe. History has included wars, recessions, pandemics, and crises. Yet over time, innovation and growth have continued. Families have continued building their futures, and planning has continued to matter. This is why having clarity and understanding is so important, because clarity brings confidence, and confidence helps you enjoy the life you worked so hard to build. Thanks for joining me for episode 178 of Money Not Math, Investments During a Time of War. If recent headlines have you feeling uncertain about your retirement and you want a plan you actually understand, one that gives you clarity and confidence, feel free to reach out. At Five Stone Financial Group, our mission is simple. turning hard work into a confident retirement through clarity, understanding, and a plan built around your life. If this episode helped bring some perspective or value for you, please like, share, or subscribe so more families can gain clarity during uncertain times. Until next time, remember, money is not just math, it's your life, and you deserve clarity and confidence in your retirement. This content is for educational purposes only and should not be interpreted as individualized financial advice. Past performances does not guarantee future results. Always consult a qualified financial professional before making decisions based on your personal situation. Thanks again for your time and hope you have a great day. Bye.